There is a number that defines your existence in Canada. It isn't your bank account balance. It isn't your annual salary. It isn't the number of degrees you hung on the wall. It is a 3-digit number generated by a cold algorithm that fluctuates between 300 and 900. The credit score. For the average Canadian and for the newly arrived immigrant, this number becomes a religion. If it's above 800, you feel a physical sense of pride. You feel like a good citizen. You feel like you've won the North American game. If it drops to 650, you feel shame, panic. You feel like a moral failure. You are afraid to open your banking app. But what if I told you that this pride is entirely manufactured? What if I told you that having an 850 score doesn't mean you are wealthy? In fact, to the banking system, a perfect score often means just one thing. You are a profitable debtor. You are obedient. You are predictable. You are the perfect cattle for the financial slaughter. Today, we are going to hack the black box of Equifax and TransUnion. I'm not going to give you generic and useless tips like pay your bills on time. You already know that. I'm going to explain the exact mathematical algorithm that decides whether or not you can own a home. I will teach you the crucial difference between statement date and due date that nobody told you, and I'll show you how banks use gamification to keep you in debt forever. Stop worshipping the number. Learn to manipulate it. Welcome to episode 2 of Financial Survival. The Gatekeepers. You are the product. The first thing you need to learn, and that school or the immigration seminar never taught you, is that your credit score is not a public service. Many people think Equifax and TransUnion are Canadian government agencies, that they exist to protect the economy. They are not. They are private, multinational, for-profit companies listed on the stock exchange. The product they sell is you. They collect data on your every financial move. Where you live, where you work, how much you owe, how many times you applied for credit, if you were late on a phone bill in 2019. They package this data into a dossier and sell it to banks, insurance companies, mobile carriers, and even landlords who decide whether to rent an apartment to you or not. You aren't the customer. You are the livestock being weighed on the scale to see how much milk they can extract. The system was designed to measure one single thing: risk to the bank. The score does not measure your wealth. You could have $1 million in cash in the bank, but if you never used a credit card, your score could be 0 or indeterminate. To the system, you are a ghost. On the other hand, someone earning $50,000 a year, owing $40,000 in loans, but making minimum payments religiously, has an excellent score. See the difference? The system rewards those who manage debt, not those who have money. The 30% trap, the utilization ratio. Now, let's go to the technical class. How does the algorithm actually work? The biggest impact factor on your score, responsible for 30% to 35% of your grade, is called credit utilization ratio. And this is where 90% of people get it horribly wrong. The mathematical rule is, you must never, ever, use more than 30% of your available limit on any card. If your card has a $1,000 limit and you spend $900, even if you pay it all off at the end of the month and zero the account, the algorithm sees you as desperate. To the computer, you are living on the edge. You are high risk. Your score drops. The bank knows this, and they use it against you with a psychological tactic. Have you ever received that notification on the app? Congratulations! You've been pre-approved to increase your limit to $10,000. Your instinctive reaction is to feel rich. The bank trusts me. What do? You accept the increase and increase your spending. Now I can buy that $2,000 TV. The moment you increase spending proportionally to the limit, you fell into the trap. The technical secret here, the system hack, is always accept the limit increase, but keep your old spending habits. If you have a $10,000 limit and spend only $1,000, your utilization is 10%. To the algorithm, this is classical music. It screams self-control. The fatal mistake is thinking limit equals available money. Limit is just a statistical tool to manipulate the utilization ratio in your favor. The statement date hack, the golden secret. Here is the tip worth the entire video. Pay close attention. Most people know the due date of the bill. Let's say the 25th. You pay on the 24th and think everything is fine, but your score remains low. Why? Because there is another secret date, the statement date. This is the date the bank takes a photo of your debt and sends it to Equifax. Usually, this date is 3 to 5 days before the due date, when the billing cycle closes. If your cycle closes on the 20th with a balance of $900 on a $1,000 limit, the bank reports to Equifax that you are using 90% of your limit. Equifax records: high utilization, high risk. The score drops. Then you pay the bill on the 25th. The balance hits zero. But it is too late. The report was already sent. The damage is done. How to hack this? Find out when your statement date is. Make the payment 2 days before the statement closes. That way, when the statement closes, the balance will be $0 or $10. The bank will take the photo and send it to Equifax. Balance $0. Utilization 0%. Your score will skyrocket. You are using the same money, spending the same amount, but by changing when you pay, you trick the algorithm into thinking you are the safest client in the world. The immigrant paradox: credit mix. For those who just arrived in Canada, there is an invisible wall. The no credit paradox. You can't get credit because you have no history. And you have no history because nobody gives you credit. How to break this cycle? Many turn to terrible credit cards with absurd annual fees. Don't do that. The correct tool is the secured credit card. You go to the bank, deposit $500 as security. They give you a card with a $500 limit. To you, it feels like debit. To Equifax, it looks like credit. Use this for 6 months. Buy 1 coffee a week. Pay on time. In 6 months, your score is born at 680 or 700. You get your deposit back and ask for an unsecured card. But be careful. Having only credit cards is not enough to reach an 850 score. The algorithm likes what we call credit mix. They want to see that you can handle different types of debt. Revolving credit, credit cards, lines of credit. Installment credit, car loans, personal loans. If you have 5 credit cards and pay them all on time, your score is good. But if your neighbor has 1 credit card and 1 cheap car loan and pays both on time, his score will be higher than yours. The system trusts those with diversified debt more. Does this mean you should run out and finance a car? No. Never pay interest to build credit. That is stupidity. But understand that when you pay off your car or your house, your score might drop temporarily. It is bizarre, but that's how it is. The system gets sad because you have 1 less debt to manage. The minimum payment myth: gamification of debt. Look at your credit card statement. There is a highlighted number, large font, bold, minimum payment, $10. And there is the total balance, $500 in smaller letters, hidden in the corner. This is no accident. This is behavioral design. If you make only the minimum payment, the bank loves you. Your credit score might even go up or stay stable, because technically you didn't miss a payment. But financially, you are dead. In Canada, credit card interest runs at 19.99% or 22.99% per year. If you owe $5,000 and pay only the minimum, it will take you over 25 years to pay off the debt. And you will pay over $15,000 just in interest. The score system was built to train you to be an interest pair. An 850 score who pays interest is the bank's VIP client. An 850 score who pays the full balance every month and never pays a cent of interest is internally called a deadbeat by the banks. They hate you because they don't profit from you. Your goal in financial survival is to be the deadbeat. Use the system, take the points, the miles, the cashback, and don't leave a cent of interest on the table. Zombie debt and identity protection. What if everything goes wrong? What if you already have an old debt that went to collections? Here the game gets dirty. Collection agencies buy your debt from the bank for pennies. They will call you, threaten you, say the police are coming to your house. A lie. Civil debt doesn't mean jail in Canada. Beware of zombie debt. In Canada, there is a statute of limitations. Depending on the province, usually 2 to 6 years, if you haven't acknowledged the debt in writing and haven't made any payment, it legally expires. They can no longer sue you. But if you answer the phone and pay $10 just so they stop calling, you revive the debt. The clock resets. They can sue you for the full amount now. Never negotiate old debts without legal advice or understanding your rights. And finally, protect your SIN number. You go to buy a car. The salesman says, "I'll run your credit real quick at a few banks to see the best rate." He runs it at 5 different banks. Congratulations, your score just took 5 bullets. This is called a hard inquiry. Every time you ask for credit, your score drops. Never let anyone run your credit unless you are going to buy that day. Always ask, is this a soft check or hard check? Be paranoid. Cash is king. Let's be honest. What is an 850 score actually for? It serves to get the lowest interest rate on a mortgage. And that's it. To rent a car, 700 is fine. To have a card, 720 is fine. Don't obsess over reaching 900. The practical difference is zero. It is pure vanity. The real danger is when the chase for the score makes you spend money you don't have. I'll take out a loan to build credit. Wrong. You are going to pay real interest to gain virtual points in a database? Your goal is not to have the highest score in the graveyard. Your goal is to have assets, liquidity, investments. The score is just a key to open doors. Don't let it become the chain that binds you. Now I want to hear from you. What myth about credit scores were you told when you arrived in Canada? Or if you were born here, did your parents teach you to fear this number? Leave your score in the comments, if you dare, or your biggest question about how Equifax judges you. In the next video, we will talk about the only certainty in life besides death, taxes, and how to legally reduce the government's bite. Stay liquid. Stay sharp.